own Myles, Udland has identified a new catchphrase, buzzword going into 2021 having to do with earnings. It's operating leverage. Doesn't sound too sexy on the face of it, does it? But could be one of the things that maybe could help propel some of the earnings gains that so many of the strategists we've talked to have been predicting for next year. So, Myles, I mean, what kind of caught your eye about this expected trend, and why do you think it's going to be something that's going to get more attention next year?
Yeah, so I was talking about this with Sam Rowe yesterday, and he informed me for our viewers. This is CFA level 2 stuff. So operating leverage is basically it's how much of each incremental dollar of revenue can you turn into profit, right? If you have an expense base that doesn't rise commensurately with your revenues, you will be able to convert more dollars to profits. And so Mike Wilson over at Morgan Stanley started writing about this back in the summer. He was writing June, July research notes about 2021 being a year in which companies that leaned up during the pandemic or were able to cut expenses, maybe it's with travel and travel and entertainment, T&E. Goldman Sachs wrote about this as well this week. They'll be able to have more profits. They'll grow their margins next year if revenues return. And revenue is basically going to follow GDP. All else equal, in general, it will follow GDP. So when we are looking at 3, 4, 5% forecast for growth next year, the equity analyst, the equity strategist says, okay, if company X is able to keep their expenses low and was able to lean themselves out during the pandemic, they'll be able to expand margins as these sales come back. Now, the downside for the three of us sitting here, for average people who are not investors, is that a lot of this comes from companies cutting labor costs and not having to compete as much to bring employees back. That was where margin pressures came from in 2018 and 2019, labor market competition. And I just flagged this because a lot of strategists are now looking at operating leverage as the reason why earnings and margins will grow next year, thus supporting high stock prices we see today.
And Myles, a very key point here on operating leverage. And you would have to think that you're going to see more layoffs because all these executives, they see the valuations their stocks are trading at, and they become absolutely obsessed with driving operating leverage. So as you get into that first quarter, that second quarter, here come the layoffs, because if they don't, their stocks are going lower.
And I got to say, you guys, right on cue this morning, Goldman Sachs wrote about this phenomenon and said exactly what you are saying, that profit margins are bottoming out and should rebound next year. They're looking, I believe they talked about an 11%. Net margins will likely rise to 11% next year from 9% this year, because when you're in a pandemic, you're forced to cut costs. And if you can keep those costs cut as we go into the next expansion, you do that. But they also highlight that possibility of lower labor costs as well, Myles. So that is definitely something to watch out for, especially as we continue to talk about the K-shaped recovery. If you're going to see firms start to cut wages and even cut jobs, to Brian's point, that could be perhaps a bigger economic issue that we should be paying some attention to.